Picture this. You finally found the perfect home or the car that you've had your eye on forever, or you just want to refinance because the rates are really low. But when you go to apply for the loan, you find out that your credit score sucks. Well, the good news is you can still get the loan. The bad news, the interest rates are going to kill you because they're going to be sky high because the bank basically is saying you're a risk. But because I've been a consumer reporter for more than 30 years and I've done countless stories on how to boost your credit score, I'm going to show you what you can do right now to improve your credit score fast because I get it, timing matters on low rates and I don't want you to miss out. So I'm breaking down real actionable steps that can raise your score not in years, but sometimes in weeks. And it doesn't even matter if your score is 550 or 750. These are the same strategies credit pros and loan officers wish more people knew about, but now you do. Before you fix it, you've actually got to know what's hurting it. So your credit score is actually made up of 35% payment history. So that means whether you pay on time. 30% credit utilization, how much of your available credit you're actually using. 15% length of credit history. 10% credit mix. 10% new credit inquiries. That means 65% of your score is based on just two things: paying on time and keeping your balances low. So let's just focus on what you can control right now. Action number one, lower your credit utilization. This one is huge and it's often one of the fastest fixes as well. So let's say you're using more than 30% of your available credit. Your score is going to take a hit. But what does that actually mean? I'll show you. If you have a $10,000 limit on a credit card and you're carrying a $5,000 balance, you're using 50% of your credit. That's too high because remember what I had said, you want that number to be lower than 30%, but it's an easy fix. What you have to do is pay down revolving balances as much as you can. What do I mean by that? I'm talking about credit cards, the ones that report your usage to credit bureaus every single month. You want to focus on your highest balance cards first. So pay them down before your statement date. And whatever you do, don't close the cards once you've paid them off. Keeping that credit line open actually helps your utilization look stronger. Or you could also just call your credit card company and ask for a credit limit increase. And you might be thinking, why would I ever want to increase my limit if I'm trying to improve my score? I'll explain why. So let's use that same $10,000 credit limit that you have on your credit card and you've got that $5,000 balance, okay? So if you raise your limit from $10,000 to $15,000, your 50% utilization just dropped to 33% without paying a dime. It is the quickest way to really move that needle, and you could see results within a month or two on your credit score. And here's a trick most people don't know. Credit bureaus don't see what you spend. They see what's reported on your statement date. So if your balance is high when the statement closes, even if you pay it off right after, it can still hurt your score. So try this. Make 2 payments a month, one before your statement date and one after. That keeps your reported balance low, which improves your utilization rate and your score. It's like giving your credit report a little mini refresh twice a month instead of once. Next, let's check for mistakes on your credit report. Here's the thing, 1 in 5 credit reports actually has an error, and some of those mistakes are tanking your credit score. So I want you to do this right now. Go to annualcreditreport.com. This, by the way, is the only official site where you can get free credit reports from Experian, Equifax, and TransUnion. I want you to look for accounts that aren't yours. If you see any late payments that were actually paid on time that you know about, or you see old negative accounts that should have fallen off after 7 years, if you find a mistake, dispute it directly with that credit bureau. It's so easy to do. You can actually just follow the prompts. It'll take about 30 days for them to actually investigate and make sure that you start that calendar too and the time clock. And when that error actually does come off, your score is going to jump sometimes by dozens of points, depending on what the error was. Here's one that is a little controversial, but it can really work. And that's becoming an authorized user. So this is powerful, especially if you are trying to rebuild your credit. You can ask a trusted family member or a friend with really good credit to add you on as an authorized user to one of their credit cards. Their positive payment history and credit limit will appear on your report, which can actually instantly improve your utilization and payment history, which are two of the biggest factors in your score. Next, stop applying for new credit. Every time you apply for a loan or a credit card, it triggers what's called a hard inquiry on your credit score, which means it can drop your score by 5 to 10 points. And multiple inquiries in a short time can really stack up. So instead, what should you do? If you are prepping for a mortgage or a car loan, stop applying for other credit 3 to 6 months beforehand. Focus instead on improving the accounts that you already have. That consistency and age of credit lines really does help your score grow faster. And here's an extra bonus tip for you. If you pay utilities, phone bills, or rent, which a lot of us do, you could actually get credit for that. Tools like Experian Boost or Rental Karma actually let you add on-time utility or rent payments to your credit report. They don't work for everyone, but many users actually saw a 10 to 30 point increase in just a few weeks. It is free to try, and it's a simple way to really show more positive payment history. So if you are trying to get that loan, that house, or that car, just don't panic. You can absolutely turn your credit around faster than you think. Focus on lowering your balances, fixing credit reporting mistakes, and consistent on-time payments. And if this helped, hit subscribe and tell me in the comments what's the one thing you're going to do this week to improve your credit score. I'll see you next time.